Good afternoon, everybody. Happy Friday. Cheers to another fantastic trading week. Hope you guys had a good one out there. Yes, it's we're doing Angel's Envy again. Just enjoying the second week of the bottle. So we'll just keep on going. Todd, again, thank you so much for the Angel's Envy. Appreciate it. Tom says pencils, books, math on the chalkboard. Are we getting homework this weekend? I'm getting homework this weekend. I have to say, I'm actually pretty excited. One of the things I absolutely loved about Online Trading Academy was physically teaching. Now, I'm on the other side of the curtain as I'm building a lot of the content and assisting with a lot of the master instructors to build content. So I love building content, but there is a certain joy about educating, getting out there and teaching. So this weekend, tomorrow, I have some Elevate sessions for Online Trading Academy graduates. So if you guys have check your email if you're an Online Trading Academy graduate. There's a session that's happening Saturday, session happening Monday, and I think another session happening on Friday. Those are three really just kind of overview about the new program that I put together that's dealing with cryptocurrencies and kind of how you might want to participate in that. But the real fun for me actually starts on Tuesday evening. Tuesday evening at 6 p.m. I will start my official, we're calling it Crypto Investor Live or CIL program. Again, this is not independent. This is for Online Trading Academy. And I will be doing 2 hours on Thursdays and Tuesdays. Of course, we're going to be switching things up since I'm on vacation the week after. But we'll be doing 4 hours a week of just nothing but in the markets with crypto, moving, transferring, storing, chasing yield, and all this type of stuff. So I'm pretty excited because, as you guys may have noticed, I really have a passion for this stuff, and I think it's actually very entertaining to look at where we are now versus where I think we'll be in next 10 to 15 years. I actually had a video that I was going to try to play in tomorrow's session, but the legal department said you can't do that simply because compliance. So let me play this one for you, see if I can find it. 1 second. I should have had it all ready for you, but I've been just slammed trying to get everything ready for today's show, and of course I'm sliding. So Brian Gumbel, you guys might know, he was on the let's see, internet. Oh yeah, there we go. He was on, what was it, Today's Show or one of those Good Morning shows, and he was talking about the internet, and I thought it was worthy of playing for you guys. So let me make this full screen just to have some fun with this for a second, as you guys will see the transition of where I think we are today versus where we are with cryptocurrency maybe down the road. It's a good one. So let me break that full screen. I'll show you guys that one over there. Oh, yeah, trying to do too many things. And here we go. This is Brian Gumbel. Keep in mind, this is 1994.
It's past. I wasn't prepared to translate that as I was doing that little tease.
Oh, that's
that little mark with the A and then the ring around it.
At?
See, that's what I said. Mm-hmm. Katie said she thought it was about.
Yeah. Oh.
But I'd never heard it.
Around.
I'd never heard it said. I'd always seen the mark, but never heard it said. And then it sounded stupid when I said it. Violence at NBC.
I heard around big fight up in the lunchroom the other week.
There it is. Violence at NBC, GE.com. I mean,
well, Allison should know.
What is internet anyway?
Internet is that
massive computer network.
The one that's becoming really big now.
What do you mean? That's big. How does one? What do you write to it like mail?
No, a lot of people use it and communicate. I guess they can communicate with NBC writers and producers. Allison, can you explain what internet is?
I love it. I'm sorry, I couldn't let that go on because it's so entertaining. Could you, Allison, come here. Can you explain what the internet is? Can you imagine if, everybody today, especially now since the pandemic, like we all know what the internet is and its utility. I mean, it's almost inconceivable to think of our lives without it. But I think when I think of the crypto world, and it's not just cryptocurrency, guys, and that's why I'm the main focus of the course I've built is it's not about cryptocurrencies per se, exclusively cryptocurrencies. It's the whole digital ecosystem. And down the road, my gut feeling is that 20 years down the road, we'll have this same sort of conversation. A lot of times people right now go, oh, what is blockchain? I don't hey, get Karen in here. Karen, what's blockchain? Or cryptocurrency? What is Bitcoin, right? I think it'll be common knowledge because it'll be so prevalent in society, the way we transact, send money, interact with businesses, they'll all be decentralized. So anyway, I thought that video was absolutely hilarious because Brian Gumbel, of course, now he probably regrets ever having done this, but he was sincere. He's like, what is the internet? I have no idea what this stupid thing is. How do you talk to people? Anyway, it was fun. I thought you guys might enjoy that one. So let's see. Can you explain the cryptic currency? I don't know if I know that one right there. Oh, crypto. Got it. I see what Tom, I got you. Actually, and Tom, I'm not going to be in center tomorrow. My studio here has better audio equipment, so I won't be in center, so no lunch for me with you tomorrow, but we'll have to do it another time. I do owe you a poster, by the way. The poster is sitting right over here all ready for you. Okay, let's see. Before we get going, Chowski says, what's going on with QQQ? I have a position in SQQ. I'm swinging the weekend expecting bearish on QQQ next week. Careful. You look at what's going on with the NASDAQ right now. Obviously, it was looking rather weak. So we saw over the past couple days a nice rally out of, actually to me, below a demand zone. So it was almost a bear trap where it came down below this yellow box, triggered some people into it, and then all of a sudden ripped out. But it wasn't a close below it. And if we look at the triple Qs here, right, it's right at that demand zone. So, I mean, if anything, this was the lower tip of that tail that goes back to the 27th of July. That was your lower end of the range. That was your buy point on this one. Of course, the futures went lower in the after-hours session, but during regular market hours, I wouldn't have gone short yet. Now, you're in SQQQ. To me, that is a pretty challenging spot to be in because you are in a triple leveraged ETF. Now, that's triple leveraged short. And you're probably thinking, oh, well, no big deal. It's only in $8. You can't go any lower. Yeah, what they'll do is they'll do a reverse split on you. And they will do that rather quickly if the NASDAQ keeps making some higher highs. They'll split this again and do a 10 for 1. So it'll be an $80 security, but you'll have 1/10 of the shares that you had. Right now, we were talking about this on the show the other day. You're starting to feel a little bit bearish, but it hasn't confirmed. We haven't had that real signal that says get out, go short. So I don't know if I share your pessimism on that one, Chowski. It's kind of to me, it's a scary position to be in. And again, I talked about this before. If you are in a single ETF, so you could have gone just a single short, right, and just done a direct inverse 1-to-1. The only time I'll pile on to a triple inverse is if I have absolute conviction and confirmation that something is going in the direction that I think it's going. Buying a triple leverage ETFs, one of the fastest ways to blow your account, especially in the NASDAQ, you're not going to get hurt too bad, but back when FAS and FAZ, those are the triple financials, came out and inverse financials, those were blowing people's accounts left and right because of how quick they were moving. So be careful. Not very optimistic about the downside here for the NASDAQ. It's looking fairly decent. It's back in the middle of that range. Yes, it's going sideways and doesn't have the great momentum, but it was a huge bounce today. Same thing with the Russell 2000 up 1.67%. Where did it bounce? Right at the bottom of this little candle right here. So it wasn't quite to the dead low that I have been talking about, which is the bottom of this range at 2087. But still, it came down to 2120, which is where it's bounced a couple of times, right? We could put a couple other lines in here. You can see it's bouncing a couple times right along that 2110 mark. Well, maybe that's another buy point for you. But until we get some breakdown below, I'm not opening up big short positions here. And triple leverage, I think you're getting a little aggressive on that one, but that's just my 2 cents out there, Chowski. Careful on that one. Monday, the momentum that we saw today on the NQ particularly, very strong. It was only 1.12%, but closing near the dead high of the day. It is coming into some supply at that 15,200 mark on the NQs. So keep your eyes on that one. But if it gets above 15.2, you might want to close out that position. Let's see. Kenny says, what if you block a legal department account? I can't block a legal department. Legal is important, especially when you have a watchdog right now, which has really, in my opinion, overstepped their boundaries and looking for any comment or suggestion that could give them something to talk about. So we'll keep it clean. I can do it on this show because this has nothing to do with Online Trading Academy. This show is 100% mine under my own corporation, so not too concerned about regulators here because I'm not making any promises. All right, Mario says, will that course be on location? No. So the crypto course right now as it stands is going to be 3 separate pieces. There's the free one, which is on demand. There's a paid version, which is it's a fairly low price point for 43 videos that will be on demand as well, 100% on demand. And I'm probably going to set up like a once every couple of weeks, like an office hour. So if people have questions on what's in that program, we can ask questions there and all will be good. The other version will be kind of like an XLT. I'll be working from my home. I'll have all the data and information, and we'll do it just like you would do a normal XLT session where you're logging in, you're watching my screens, etc. So there you go. when you go on vacation, who will be covering you on this show? That's a great question. I don't know if I might actually have to take a week off. As you guys know, I'm a huge fan of the band Fish. Cheers to that. And they will be performing 2 shows in Lake Tahoe. And I'm also going to be going, so I'll be seeing Fish on a Tuesday, Wednesday, Widespread Panic on a Saturday, and then Chase Rice that following Thursday. So it's like I can finally go see some music, which I love live music. So I will be going up and hanging out with my friends, visiting my dad, and giving him his birthday present, which I cannot tell it on the air. You guys already know what I got him, but we won't let him know because I'm sure he watches my show regularly. So, yeah, I'm not 100% sure on that one. I'll probably do a show on Friday of that week, which is not this coming week, but the week after. But I'm not sure if I'll be able to do shows while I'm up there. You probably don't want me doing shows while I'm up there. I'm a little different element, as we will say, for the shows and the environment in Lake Tahoe. All right. Let's see. Yeah, Big Eb says that triple Q can be really nasty. Make B-Dub do it. I don't trust Brandon with this show. If you knew some of the stuff that he did off camera when we were doing Power Trading Radio, oh my goodness. We actually have a term. It's called a Wendell. So you can actually Wendell somebody. Yeah, it's got his own name. All right, let me go into some viewer questions here. And sorry for the, let me get the Brian Gumbel off my screen. And dive into some listener questions. And again, the picture here, the graphic, no homework, although maybe I will give out homework for you guys every now and again. You know, it's fun to come here and join and listen and learn, but maybe I can come up with some activities that will further facilitate your learning or understanding of something. So I did this simply because it's back to school, and it was interesting hearing Foot Locker make comments about how, you know, their earnings were really good because people were buying back to school shoes. And I thought, well, that happens every back to school. It's just the typical, the course of action. But back to school, first official week for most schools. Of course, some starting next week, maybe the week after, but a lot of them around here started this weekend. So back to school. Let's talk about this one for a little bit. As you guys know, AI Day happened yesterday, and Lee says, I watched the entire AI Day for Tesla yesterday. I'm blown away. What's your take on Tesla? Well, I'll tell you what. As you guys know, I'm skeptical of Tesla just because the valuations have gotten so ahead of themselves. I mean, they're just really lofty, incredible valuations on Tesla. However, you know, if you saw it, and I didn't watch the whole thing, I just caught pieces of it and some of the highlights. Impressive. I think I mentioned this before. I saw was it a TED Talk? It might have been a TED Talk or something where they're talking about the AI, and I was floored at the intelligence that they're building into their AI systems and all the data collectors. You know, we were talking about years ago, I was really worried that my German Shepherd would get out of the house, right? He's my baby, and it would be horrible if something happened to him, and he got out twice. So I'm like, you know what, I want a GPS collar, but a GPS dog collar is like extremely expensive, or was a few years ago. So I found these little tags, and I don't forget what they're called. I'll call them dot tag. And if you installed the app on your phone and you had this tag, your phone would tell you where that tag was. And I'm like, great, my dog gets out, I can find out where it's at. Problem is, the only way that this tag worked was if you had this app installed on your phone. So if he got, 50 feet away from me, it didn't work anymore because the tag didn't have its own GPS signal. It had to be picked up by some device. So if he's down the block and that person doesn't have the app on their phone, it doesn't work. Now, Apple just started something, but I think they're actually called Apple iTags. I think they're called Apple iTags. And all it is, it's the same technology, but Apple has built in that device will communicate with any Apple device. And of course, Apple's everywhere. So now if my dog gets out, he's got the Apple tag on him, he can go down the street, I can pick it up because somebody else's phone has triggered and registered that and says, hey, he's over here by my phone. Great, I can see it on a map. The reason I bring that story up is Tesla now has that same sort of technology, this collective data structure with every Tesla that's out there. They're all working together and collecting data. So some of the things I found very interesting about AI Day, if you didn't get a chance to watch it, was how one car's mapping of an intersection and all the vehicles around it layers out on their grid, and then another Tesla maybe at the other side of the intersection maps it out, and all of a sudden they have this layer upon layer upon layer of data, and they create almost like a four-dimensional picture of what's going on at that intersection. And it was just incredible watching Tesla utilize that, because if you have one car and it drives around and collects data, great, you'll get something eventually. But if all these Teslas, and if you're here in Southern California, they're everywhere. the data collection from them is incredible. So they are really, in my opinion, the lead dog in the AI space. Now, of course, there's other companies that are collecting data like IBM and Watson and Amazon Web Services, but who has the most data from a driving perspective, right? Understanding braking, speeds, pedestrians, all that stuff. Tesla is miles above it. As Steven says, a mesh network. Absolutely. It's exactly what it is. And personally, I think that they're almost a little too far ahead of their time. I think we have a few years to go before we fully embrace driverless cars and autonomous vehicles, but I, for one, hope that I'm still kicking when that's fully implemented in society. That said, let's take a peek at Tesla, because right now you're really looking at, with Tesla, the optimism and expectation. Now, what's interesting for me is how Tesla is still right around $680, but given the recent news, you would think that that sort of price or that sort of announcement would have vaulted Tesla's stock even higher, because it showed some pretty interesting pieces. I don't know if you guys caught it, but there was actually a robot. They're calling it the Tesla bot, which are looking to get rid of mundane tasks. So for example, grocery shopping is what Elon Musk talked about in the AI day. And I was like, I actually like grocery shopping. I don't know what's about you, but what I don't like is having to mow my lawn, or yard work, picking up all the dog poop when you got two 100+ pound dogs. I don't want to do that. Get me a robot for that, I'm happy with that. So he outlined some pretty cool things, and his goal, and I think this was brought up with the Don Franz show a couple times, is look, Tesla's more than just a car company, right? They're an energy company now on one level. They're also a car company, but to me, they're leading that way for AI. And, if they're that lead dog, does a $680 sticker price work for Tesla shares? Probably not. It probably should be much higher than that. That said, when we look at some of the fundamentals of Tesla stock, and this is, we've talked about this in the past, one of the things that a lot of people will look at as far as expectation and maybe growth is, what is their PE ratio? At this exact moment right now, Tesla's PE ratio is pretty significant. Your PE ratio is 358 as we speak. The average for the S&P 500 is like 15 to 20, somewhere in that range. Now, it's higher than that right now, but the historical average is about 15 to 20. So you're looking at already significantly priced in expectations about the growth of Tesla. Now, I know some people hate Tesla, some people love them. I actually think they're great looking cars. We could talk about customer service and such, but I think they have the lead there. So a long-winded answer to your question, Lee, what's my take on Tesla? I think that they are positioned for greatness. I think Elon Musk, as eccentric and as bizarre as that guy is, he's doing the right things. He's facilitating a change in society that I think is needed, and I really love what he's doing, from SpaceX to the Boring Channel and to Tesla. I think there's a ton of stuff. As Kenny says, Tesla will be back at 900 by the end of the year. It's funny because you'd look at that price chart and be like, oh yeah, 900, that seems so far away. It's really not. It'd be called a 30+% gain from this point. Actually close to a 40+%. But I think you might be right. End of the year might be a little aggressive. I think you kind of have to wait it out, but I think, for anybody who's looking at Tesla, it's definitely a gamble. But I think if you're going to gamble, you bet on a winning horse. You bet on the boxer who's got the best odds. And right now, to me, that would be Elon Musk. As much as I hate to say it, buying Tesla at 680 with a PE of 385 seems obscene. But I agree. I think that this one is most likely poised to go higher. And if we look at just pure technicals, let's bring up, here's the technicals on them. Zoom out. Look at the trend that started back in 2020, right? Obviously, 2020 was the gangbuster year for Tesla, but notice you have this recent uptrend that started right around mid-May, and it looks to me like it's still trending up slowly. It's tight in this tight little channel, and if you want, I'll even draw a channel on there. Do I have a channel tool on here? I don't have a channel tool, but we'll draw. Let's draw a parallel channel. See if it'll let me do this. Oh, wow, there we go. Love it. So I'll go through here, and you guys can kind of get the general idea of this channel. Well, I think we could agree that channel looks pretty solid right now. So trend is up. As you guys know my common phrase, the trend is your friend to the bend at the end, so go with it. Lee, if I had to pull my inner Jim Cramer, I'd say I wouldn't hit the strong bull sound, but it looks like a buy on Tesla, especially because you're at the bottom end of that range and trending the upside with good announcements. So there you go. He is, Tom. So, and I'm curious because I'm not super proficient in the AI space. I think when it comes to the automotive side, there's nobody that's ahead of Tesla with regards to automotive AI and just data collected. Of course, AI in other spaces, I think that there's companies that far exceed them. And sure, Tom says they tell you that they are the lead dog in AI, but there are plenty of competitors ahead of them. He is a showman. Absolutely. That said, and again, I'm not his biggest fan, but he is a showman. But does he deliver? It seems like on everything he delivers at some point in time, right? Some of these promises he's talked about. I still haven't seen the Roadster out, which I really want. All right, what else do we got? Do I have any videos that show how to draw those magic yellow boxes? I don't have any specific Chowsky that are tailored just to those videos. It's just something I do. I mean, generally what I'm doing is a derivative of what Online Trading Academy teaches, their supply and demand methodology, or what's called core strategy. So generally I don't explain how to draw the yellow boxes because that's part of the company that I work for and teach for. So I don't do that there. All right. Let's see. What else do I have here? So yellow boxes. Next question. And again, if you have more questions on that, Lee, let me know. This is a good one, too. This has been a wild ride. Scott says, please look at energy on today's show. I'm long XLE. Where is the demand zone? And I have to ask you, Lee, where's your stop? Making me feel real nervous with the XLE chart right now. So here is your XLE or energy chart. I have been selling calls on this, and luckily for me, I had $40 calls, so I didn't get exercised. I did get exercised on my silver today, so I'll be long as of silver. I'll be long silver as of Monday morning, and I'll see what kind of call options I want to sell on that one because right now I'm underwater on silver. But my puts on the Russell, the S&P, the NASDAQ, and XLE all expired worthless today, which is great because I collected all that premium. Now, with regards to energy, you know, I hate to say this, Scott. I was a fan of energy for a while, but we've rolled over. And for those that like to look at patterns, and I always talk about things like head and shoulders, and I'm a fan of head and shoulders patterns, take a peek at this right here. I know it's a rather ugly one, but we can make the argument that that is a head and shoulders pattern. You got your left shoulder here, which went from about January of this year to April. Then you had from April all the way to the new high in June, came all the way back down to pretty much that neckline at the mid-June, and then we just formed that right shoulder. Well, textbooks will tell you that when you have something like that, there's a measuring object which goes from the top of that head and shoulders pattern to the neckline, and when it breaks, that your target is measured that way, which would put a target for this pattern at $34. Now, I don't think we're going to drop to 34 right away. I do think you've got a pretty substantial stopping point right around that $40 mark. So we'll see what happens on Monday as I go to sell some more put options. I will probably target lower than 40 because I want to get some maybe a little less premium, but I want to have a greater probability of not being filled at expiration date when I sell those September put options. So I'll probably looking down around maybe 38. I could possibly go lower, but it all depends on what the premium is. But Scott, not a fan right now. And you look at a lot of the energy stocks. I actually have an energy portfolio that we, one second, let me get rid of those. An energy portfolio that I was building. These are the components of XLE. And I mean, here's Cabot Oil and Gas, right? Not looking good at all for Cabot Oil and Gas. Here's Chevron. Right? Not looking good either. We've had this pronounced downtrend for a while. You've got Occidental Petroleum. Again, looks like a head and shoulders pattern. Double topped it a little bit, maybe drifted lower. We're near a demand zone now. You've got ExxonMobil, right? ExxonMobil, new lows. And I talk about this all the time on the program. Everything works until it doesn't. All trends continue until they don't. And that trend in energy was real strong to the upside, but something changed right around mid-June to early July for almost every energy stock out there, and now all of a sudden it's looking weaker. Again, we could cite what we talked about in this program, which is weakening global demand because of COVID and potential lockdowns, and increased global supply because a lot of the fracking going back online, as well as OPEC saying that they're going to raise their production numbers. So it doesn't look good. You say, where is the demand zone for XLE? It's more important is where do you plan on getting out? Because if the trend is your friend, I think XLE is going to continue on down. Your next stopping point, if I was to put a stop on this, it would be right below this little area of consolidation off to the left. So let me draw a little yellow box out there. Oh, this is the wrong chart. I want to do it on TradingView. So my little yellow box would be somewhere right around, I'll put that on here. So there's the yellow box, and I will put some lines on here so you kind of have an idea of range. It's from about 44.75 down to the low point there is 43.03. So if you get below 43, I say you got to definitely get out. At this point, I would probably already look to be out, but right now it's not looking good for energy in any way. Just drifting lower and lower and lower, and the macro picture says probably going to get even lower than that. But he says negative 26 bucks for crude oil. XLE looks like a type of head and shoulders. Yes, yeah, it does. It's a little bit of a stretch, right? Exit XLE when we talk bearish on the show. Hey, my pleasure, Big Eb. And again, I could have been 100% wrong, right? So Big Eb says exit XLE when we talk bearish on the show. Please, if you hear me say things like this, like Scott, I am right now. I'm looking pretty bearish on XLE. That doesn't mean it's going to go down. That's just my perspective. If you disagree, that is okay. We can agree to disagree. That's what financial markets are built on, is disagreements in direction. But if you do, hang on every word I say and think I'm the gospel, don't. I'm going to be wrong. And if I am wrong, I want to make sure that you have a plan in place so you can pull the plug and say, okay, well, Merlin was wrong. I'm getting out. I hate to see you get slaughtered on something that I say because you didn't have risk management in place. Anyway, let's see. All right, cool. So we got all that. But he said we're not going to see crude oil at negative 26. I just don't see that happen. I mean, you never know. It could, right? All right, I need to take a sip of whiskey here as I switch to my next question. If you guys have some questions, keep them coming in here. Kenny says, yeah, very smart. They're making the bot only 5'8", 125 pounds. I saw that. I was like, that's kind of weird. 5'8", 125 pounds, but that's prototype. What he was talking about actually was nice. He says they're going to have a working prototype by next year, which should be very interesting to see that one come out. Good, Big Eb. Cheers to that. We should all own our own trades. Every trade that we make, every one of them is our own doing because we pulled the trigger. So do your own analysis, but hopefully I can maybe make you guys aware of some things you may not have seen. All right, let's see. Heather. I haven't talked to you in a while, Heather. I bought Adobe months ago. Not sure when to get out. Any help would be appreciated. I have not watched Adobe. Wow, that is an impressive one. Oh, here's the chart for you guys. Pretty impressive chart there. I'm going to go out to the longer term time frame because I'm 100% certain that is, holy cow, what do these guys do? Cure cancer? It's Adobe. Are people buying Photoshop that much? I knew that stuff was expensive to begin with. Hey, Tony, good to have you with us. I knew that stuff was expensive to begin with, but goodness, how do you justify a $647 price target on Adobe? They must just be licensing fees up the wazoo. Heather says, I bought Adobe months ago, not sure when to get out. Well, I guess no matter where you bought it, you're making a profit, dear. So congrats on that one. A great looking chart here. Where to get out? Well, when you look at the big picture like this, you don't have anything historically that could even remotely get you back to an idea of where to sell out here. I mean, there's no supply level to go back to. So really, it's a much more challenging prospect. I actually prefer when I have supply levels historically that I can use as targets. So what do you do here? For me, it's one of two things. You're either going to set a trailing stop, which is going to be automated, or you manually do trailing stops and slowly move things up so that you don't give back any of these gains. This is one of the more impressive charts. Goodness, that is a phenomenal move we've seen in Adobe, and it doesn't look like it's relenting at all. So, I wouldn't say get out. I would say just keep a trailing stop, and it's this point. If you happen to get out at, let's say, 640 or 620 or 630, great, you made huge profit. But, give it a little room to run, set a trailing stop, and let that thing continue to run. You can use a lot of different metrics to set your trailing stop, but definitely have a minimum of physical hard stop, and I would put my hard stop probably around just below 620. I put just below that area of 620, and that'd be my hard stop. If not, I would do a trailing stop and let this thing run. But congrats, Heather. That's a beautiful winning trade you got going on there. All right, I got more charts we want to talk about. Ethan's asking me a bottom on the Aussie dollar. We've talked about the Aussie. It's been looking real ugly. It's been breaking down below demand levels. And you see back here, this was the main demand level we're talking about, right on 73.20, right? And it just keeps on drifting. The last 4 days have been real ugly. Now, you ask, is this the bottom for the Aussie? Well, I mean, nobody ever knows exactly where the bottom is, but logically, if we look at this, where's the highest probability this thing's going to bounce? Right here, right around 0.70. That means you got 138 pips left on the Aussie dollar before you get there. That's quite a bit of money still to the downside. Now, that said, You notice the pattern we have here. It's a hammer formation that formed today, so that's technically bullish. You don't have any high volume, although I never trust volume on spot Forex anyway. But you have a little bit of a hammer formation. I would, if I was looking to buy Aussie dollar, I'd wait. I'd wait for the 0.70. Let it get down there, because right now you're going against the grain on someone that's moving aggressively, and you can see, oh, I'm sorry. Thank you. Sometimes I do that, guys. I'm over here looking at the chart, and I completely forgot to put you in. I apologize. Thanks, George Katut, for reining me in here as I don't have the chart on. So now I can have your chart. And why was such a long delay? It seems like about 30 seconds for the chart. There it is. Hallelujah. Hallelujah. So, yeah, I'm... Big Kev, it's nothing to do with the drinking and charting. I've got 3 monitors over, but, you know, as we get going on these topics, I'm drawn into this chart. You know, I actually really like this Aussie dollar chart. I think that at some point, I think, Ethan, you're probably right. We probably will get a bounce to the upside here. And, you know, maybe we get a retest of this 73.50 mark. You know, it's not that far away. So I still, at this point, am overall bearish on the Aussie dollar. I think you're going to have a challenge and a test as it comes down to the 73 mark, which it hasn't been down there for just about a year. So I'm okay. I'm all right with that one. Stay short. I wouldn't be calling a bottom here, even though you have a hammer formation. If you wanted to, you guys know my rules for trading hammers. You could go and put a line right across the high of today and wait for it to break above 71.55. You get above 71.55, then I think you might have a little bit of an upside move. But again, the trend is down. The trend is your friend until what? The bend at the end. All right. Cool. I did well with Aussie USD, and yeah, it's a great week, right, Tony? There were some nice moves in the USD CAD and British Pound. Big downside moves in that CAD. Love it. Love those big swings, especially the last couple of days have been really big moves. Yeah, of course, Tony. I don't think anyone's buying these things long right now, except maybe Ethan over there. All right, last one. We talked about this the other day when I did the infrastructure show, and really just kind of ran through the different infrastructure companies. For some of you, you actually emailed me and said, hey, can I get a copy of the list of the infrastructure stocks? If you guys want that, I'm happy to send it out to you. You can email me at TraderMerlin@gmail.com. I have basically it's a spreadsheet that I have some of the indexes I follow, you know, like XLE, XLF, what are the components of that, just as a quick reference guide for me. But I have a materials one on there as well, which if you guys want, I'm happy to send it. Just send it to me at TraderMerlin@gmail.com. All right, so I'll do this one and I'll get to Chowski's easy PW question. He says, on BHP, he says, I like BHP from a fundamental perspective as discussed in your show, and the price is around 58 to 55 to go long if it gets there. So let me go over here real quick because I draw these lines before I forget the numbers. He had 58 and 55. So we'll put numbers on there at 55, which I like that as well. And then we'll go 58, which is a little bit higher up. Yep, I'm all right with both those. Let's see. However, what are your thoughts on these price levels with the massive drop this week? It seems to have at least turned today at a rally-based rally around 63 bucks. Yeah, it's tough to say that with this chart because it was such an abrupt sell-off. I mean, my goodness, from 78 down to 63, that's a pretty significant drop in a 4-day window of time. From the long-term perspective, though, I think BHP will probably be in a good position. So with this climactic volume we've seen, my only concern is why is that happening? Now, I remember we talked about that the earnings were not that great. They didn't look fantastic. But we know that money's going to be going in infrastructure. This infrastructure bill is going to pass in some form. It may not be $2+ trillion, but maybe it's $1.5 trillion. That's still a lot of money. Now, as far as you getting all the way down here to these levels, I think that the logical point, like if you look here, we literally came right down into what I would say is one of my favorite demand zones on this price chart. I mean, if you look at this little here, it's you actually mentioned it's a rally-based rally. It's this rally-based rally that was all the way back into December of 2020. Oh, the yellow box is making another appearance. 2 appearances in one day, right? There is your yellow box. Of course, you really can't see that. I'll zoom in on for you guys. There we go. You had this aggressive move. It went sideways and then just ripped out. So, I mean, my logic tells me that if we get down into that area, which is right here, put some little lines on it, I think you got your buy point right now, don't you? All right. We are in that spot as we speak and bounced out of it. So, talk about supply and demand. To me, this is a perfect advertisement for it. Yes, it's after the fact because I did not make this trade, but, that's the area that I'd be looking at. It's the area right before that big drop. It has some qualifiers that I would look at with odds enhancers that are taught in Core Strategy and Online Trading Academy. That would be a spot where I would be comfortable and actually happy to buy, especially with climactic volume. That said, it looks like BHP is going to have a bounce out of here. I don't know how high it'll go, but we have a ton of unfilled gaps. My assumption would be that you're going to have some bottom feeders jump in here after it's dropped so much in value. So I like Mario. I like this. I don't think you're going to get all the way down to the 58 or the 55. I think you're going to have a tough time getting below that 62 mark on BHP. All right, what else do I have? Let me go to one last one here. EZPW. This is for Chowski. Chowski, you're new to the show. Good to have you with us, my friend. Thanks for the interaction today. I appreciate it. I don't know what easycorp does, so I can't pull the Jim Cramer and pretend I know everything. I don't know what easycorp does, but let's just look at it from a technical perspective. And it's funny because it's giving me rather conflicted signals. Here is your longer-term chart of it, just so we can see the big perspective going all the way back into 2012. Doesn't look great, but it hasn't made a new low really since March of 2020, and it's been higher lows ever since then. Now, right now, you have what some would call a bullish flag. It's a little iffy for me to call this a bullish flag. Bottom line is you have sideways price consolidation, and it's consolidating between, again, we all draw things at different points. This is where I would draw because I see more touches. It looks to be about $6.31. And normally, Chowski, I don't usually trade penny stocks. To me, this would be considered a penny stock. So I'm looking at this range right here. I'm going to tighten this up. I cut out tails sometimes if they're kind of one-offs. I go by bodies. So that, to me, is your yellow box in your zone, which is going to be between 613 and 631. I would say if you get a close up above 631, you got some decent upside potential, right? I think 675 becomes your first target. You can see some higher up around 7.25. But it's starting to look a little bit better from a strength perspective. It's hard to say, is it really strong? Because look at the high you had just a couple months ago in June. It fell from 770 all the way down to 550, and now we're clawing our way back. So I'm okay with the price right now. I wouldn't put all my eggs in this basket. It just doesn't have great technicals, but it is looking stronger. And if you put a gun to my head and say, hey, you got to pick a direction, Rowan, which way is going to go, I would be inclined to think that EZPW is more likely to head to the upside here and challenge some of those supply levels coming up, namely that 675 to 680 mark. All right, let's see. Chris, happy Friday, my friend. Hope you're not covered in grease. Hope you have a great weekend. Chris says, I love Teslas. I love the product. I don't work on them because I don't want to even try to order parts. You can't call anyone. You have to email a spreadsheet with the part numbers. And you see, coming from a mechanic, difficult. See, they're probably forcing you to go to their authorized Tesla centers. Are you an authorized Tesla center, Chris? To get those part numbers, you have to take them apart. Yeah. I actually saw some really cool videos on YouTube where people actually took apart those motors. Pretty impressive. The technology behind them. No transmission. It's all built into that motor. Pretty cool. All right. I think that's going to do it for me, guys. I didn't realize what time it was, although I still have half a glass of whiskey. Normally, I can pound through at least one glass while you guys are on the show, but I guess got to take it easy today. Save myself for a big weekend out there. Got to have a great class tomorrow. All right. So Monday doesn't really give you anything with regards to earnings. There really is nothing that's overly noteworthy for Monday's session on the earnings calendar. I'll give you a couple names. I just building out the Monday morning must-knows, which is will be released here in a couple days. We'll record that one this weekend. But you had, I think, Palo Alto Networks and JD.com, which is, most people don't even know what JD.com is, just another online retailer. Now, as far as the fundamentals, there are some fundamental economic data coming out next week that you might want to pay attention to. When you look at Monday's action, it's rather quiet, but for the euro, you do have some German data. There's German manufacturing sales and PMI. There's also manufacturing sales for the UK, for the US, so it's kind of that back to manufacturing type data week. One number in there that I really am interested in is the existing home sales. Now that number is going to be coming out at 7 a.m., so that's 30 minutes into the trading day on Monday. So that to me is an important one because I just get the sense that this is overheated, and I want to start seeing, I don't want to, but I'm expecting to start seeing things like existing home sales, pending home sales, new home sales plateau. And once they plateau and go flat, then we'll start to see the slide. And that could take another few months. But right now, the data for existing home sales has been rather strong. They're expecting it to drop slightly from 5.86 million to 5.82 is the number I remember. It has been dropping for the past 6 months. So it's plateaued, and now we're starting to see the inventory or the existing home sales numbers drop. So that's an interesting one to keep an eye out for Monday, but that's pretty much it. All right, what else do I have? Slacking? Come on, George, I'm not slacking. Tesla like Harley Davidson said, instead of $100, it's $1,000 for any part. Yeah. Well, you can get your own Harley parts, can't you? Yes, Big Eb, loving Cardano. Now, let's talk about Cardano for a second, because I hear so many people talking, saying it's a trash, it's a scam, blah, blah, blah. I don't believe it is. Here's the Cardano chart. You have all-time highs put in on Cardano today. It's ripping. Now, why is this? Because coming up next month, guys, they are rolling out their smart contracts. And there's already a ton of people positioned to jump on the Cardano blockchain because it's faster and it's way cheaper than the Ethereum blockchain. Remember, Charles Hoskinson came from Ethereum. He was one of the original guys, and he went and did his own thing. And I think when he built Cardano, he built it with the understanding of, I have to address scalability and cost because I want this to be profitable. He's a for-profit business. So I think you're going to see Cardano probably double by the 12th of September. I think the 12th is the date it comes out. My guess is you'll probably see this at $4 or $5 by then, and I'll be smiling all the way because I have a pretty good position in Cardano. But yes, all-time high today. Go Cardano. All right, how much time do I got? Okay, you got it. I'm not a cat. OEG, he says. OEG. Ooh, brother. Please tell me you don't own this one. Do you? In OEG at $2.99. Ooh, boy. Looking for infrastructure play. Looking for 450 short-term. Top at 280. Or stop at 280. And awesome. Thank you. I'm not a cat. Or I'm going to call you Cat. Thank you, Kat, for having an entry, a target, and a stop loss. That means a lot, actually. That's pretty important. Now, let me put those numbers on here because I want to just have those to verify and track with. Let's go to, you said your stop loss was 280, all right? And there's your 280 point on this price chart. You can put your entry right there at 299. I mean, the only saving grace I have with this right now is you are sitting right at that zone. You're right at the low that we established back in mid-May of 2021. But look what happened since I'm not even sure what this is. It's not an earnings play, but it jumped up a couple days after earnings and has just been free-falling ever since. I mean, this is one of the most beautiful downtrend lines you're going to see. Grab a snowboard. I want to get on this slope. Pretty ugly. I think you're okay as long as you take a loss. If you take a loss on this one, Kat, and you say, all right, if it gets to 280, I'm going to wipe my hands of it and be done, then cool. But you have to take that loss because if you don't, you can find this thing dropping real quickly. Right now, you're catching that falling knife. I mean, you know that, right? It's been getting weaker, although you're right at a point where I would agree with you. If I was going to take a shot at this one, it would be right now. I think you got 20 cents worth of risk per share on this one. Fine. I'm all right with that. You said your target was 450, which you're targeting this previous gap up. Yeah, I think if I got in with a 20-cent stop and I'm long at $3, this 260 mark is also, or sorry, 360 mark is also a minor supply zone as well. Not aggressively strong, but I don't see anything really strong until they gap up. So I'm all right with it. Kat, it's one that I wouldn't take personally unless I was really desperate for a trade, and I found the older I get, the less desperate I am with regarding forcing trades. I'd rather sit there and take my sweet-ass time and not even make a trade than force something, because I have been beaten many, many, many times. All right. Hey, Ted, good to have you with us. You missed it. I was just talking about OTA and the courses and stuff like that. I'm giving OTA a plug. Let's see. SD. I'm not sure if you're talking SandRidge Energy. Again, these are real cheap stocks. I generally am not sticking with cheap stocks, although I liked what's going on with this one since April of 2020. Don't know what they do, but energy companies right now, got to be careful with energy. Not exactly sure what aspect of energy they're in, but huge day today, right? You're up 8% on the day. You're coming right into all-time highs. So I personally, again, I'm not this type of risk chaser. I would probably back out. I wouldn't make the trade because What are the odds? Are the odds great that this thing's going to rip through this all-time high, which actually dropped it from 880 down to about 740 in a period of 3 days? I think it's going to. There's unfilled supply orders there at this 880 mark. So to me, kind of dangerous. If anything, I would wait for a breakout above it and play the breakout trade on Sandridge. But that's just me. I'm a little. You guys all know me. I'm not the type that likes to jump on something at all-time highs. And it's not all-time highs for Sandridge, but certainly the move that's happened just for the month of August alone. We're talking less than 23 days. It's gone from a low of $5.45 to $8.80. I mean that's a pretty big run. And, could it continue? Could it jump to 12? Could it jump to 15? Could it jump? Yeah, sure it could. But it's just risk that I'd rather put my capital to use in a different manner where I'm not taking on this much risk. I'd rather have a more consistent trend. Okay, we've gone over economic calendar for tomorrow. We've gone over earnings calendar for tomorrow. Hopefully I will see some of you. So, Tom, I hope you and your wife have a great time tomorrow. Feel free to interact in the Elevate session. You know the presentation because you were at Symposium, so you kind of know what I'm going to talk about. I'll show a couple new things, but we're going to talk really about why crypto is important, how it came to be, what are some of the, I guess, segments and fragmentation of the digital assets ecosystem, and why not only do they present. I think what's so critical about cryptocurrencies is this. It's not like I'm buying a stock that, okay, it goes up in value and maybe they make great cars or maybe they make great software. I'm buying into technologies which disrupt a current system, right? Decentralized networks and DeFi, to me, are upending the entire financial system and will do so going forward. So you have not only the price appreciation of crypto or drops, right? So we always have the risk of things going against us, but we also have a way to collect dividends or yield with cryptocurrency. So for example, I spent some time here the last few days just moving my holdings from different brokerage firms and wallets to get greater yield. I have a matrix that I built out that has all of these different rates of return. And on one exchange, I can keep, let's say DAI, right? DAI is a stable coin. You can keep it on one exchange and get no interest whatsoever. Cool, I'm just keeping it there. Or I can move it to another one and make 3%, or another one to make 6%, or another one to make 10%, or another one I can make 12%. So, part of my task is in the crypto space is I'm constantly moving things around going, I don't want to make 0 on this exchange. Give me an extra 12%. I'm already taking the risk of holding these cryptos, so why not pay me more for it? Just to hold it, I was going to do it anyway. So there's so many different facets to it with regards to how we can potentially profit from the cryptocurrency space. And then you go out to which cryptocurrency will be the lead dog down the road, and even greater, which one will be the lead project, right? Who's going to be the number one from a transaction perspective? Who's going to be the one who dominates the DeFi space for insurance, for exchanges, for synthetic derivative markets? It's just all of a sudden everything is just booming and booming and booming. So, James, if you're an Online Trading Academy graduate, the sessions I'm doing for tomorrow and Monday and then Friday are just for Online Trading Academy graduates right now. You should have received an email. If not, you can contact your local center. Hopefully, we'll open this up to the retail public in another couple of weeks. But right now, we're just doing it internally to our grads and starting there. All right. Oh, boy. PT, AMD, I was just going to end. You caught me right. Are you a friend of Big Eb's, PT? You trying to get me to go a full 1 hour show today? Come on, my dog's staring at me, just hoping I will release the squirrel we just caught so he can chase it around the yard. I caught a squirrel. These little suckers just make my dogs bark and bark and bark and bark and bark. Okay, AMD. Let's take a peek at that one for... Oh, my goodness. You guys, quit asking... Why didn't you ask me these questions earlier? PT. Sold AMD covered calls, $47. 47? 47? Are you sure you're on the right one? Wow. I'm not sure why you sold a $47 covered call. That doesn't really make sense. It's okay, PT. He says he's got a January 2020 call that you sold at 47. Are you expecting that the price of AMD is going to be under $47 by January? I mean, it could. It's $104 right now. But the only way that I would do that, and of course you're going to collect some massive premium for that, right? You got some huge premium for that because it's so far in the money. But if you sold the call, that means you got the right. Someone has the right to take your shares away from you at $47, and that's where my cursor is. That's way down here. pretty gutsy. My guess is you're going to lose your shares. I guess if you feel that that AMD is going to continue to fall, okay, it was a while ago. I don't know. I personally don't think it's going to get down below. So my assumption would be that you're going to have your shares taken away from you. So as we get closer to January 2022, you're going to start to see the value of those calls drop, right? The value of the premium involved in that is going to continue to slide and slide and slide. Now, since you sold them, that's fine for you, but you run the risk of them taking those shares away from you. I personally, I don't write like that. Like if I'm selling covered calls, I'm going to do an above current price because I'm staying in it because I think it's going to go up, right? If you thought that AMD was going to drop to $47, why don't you just get out and go short, right? To me, that would be the easy thing to do if you think it's going to go that low. Mario, Bitcoin is in the supply zone that caused the big. Bitcoin is at the supply zone that caused the big sell-off, so will be interesting to see how it plays out. Yes, definitely, it's interesting to see how it plays over the weekend. Right here's your Bitcoin chart. And as part of it, you can see there was a drop, a base, and then it sold off aggressively. And we're right at it now. It's been a great 48 hours for the whole cryptocurrency space, especially those that we highlight as being Generation 3. Generation 3 to me is the programmable side of things, scalable blockchain, smart contracts, and seeing Cardano and some others now really pushing smart contracts. I think that you might have a little bit of challenge for Ethereum, right? Yeah, roll it. Something's new. So yeah, I think Bitcoin will probably have a great weekend. We'll have to see how it pans out, but I'm definitely bullish. Okay, many crypto email, need to check more. Yeah, just look for Online Trading Academy, James. You'll see it come from them. I don't know if there's still space. I know we've got a lot of people in tomorrow's session, so it'll be fun. It's actually, we're connecting to I'll be connecting to like 8 different Online Trading Academies. They're doing physical in center, so you can do that, or I think online as well, but... All right, I got to run, guys. Sorry, Chowski. I would love to look at it, but I got to run here. I got to get out of here before 3 o'clock. So thank you guys so much for joining today. For those of you who want me to cover some specific topics, let me know, TraderMerlin@gmail.com. I will tell you this, Monday we're going to have Michael Young on the show, which I'm really excited about because Michael Young is an old floor trader out of Chicago, one of the nicest guys you'll ever meet. Tuesday, I'm not going to be doing a show because I have some leadership meetings, and then we'll see what happens Wednesday, Thursday, Friday. I may have some other guests on the show, but that's what we got cooking for next week. Michael Young on Monday, no show on Tuesday, and the rest of the week we'll be there. All right, everybody, that's going to do it for me. Hope you have a fantastic weekend. Cheers. Take care, my friends. I will see you all on Monday. Bye.